Carson, the MFC Lines, another whiteboard for you. DCarsonCPA, the reporting cycle. The reporting cycle is measuring a period from T0 of the balance sheet generation to T12, the balance sheet at the end of the reporting cycle, typically measured in terms of a year, but potentially more or less, and incorporating within it a business cycle or many business cycles and reporting periods, depending on the nature of the line of business and what's at stake. Behind this broad map is also the lines of people power potential, which is another my word for human capital assets, and the IT lines of productivity, helping support the financials, the data lines, which are text and character driven OCR data, and the points of software communications, because there's specific lines of machine language and programming and different things that need to happen to support reporting with data tables, with programs to push and pull data, and all that fun stuff. DCarsonCPA in the aggregate is a line of global financial decision-making research. It's with you as a companion line. It's my line to map in and add big value services with lean efficiency where you are. I can use those lines plus a lot more that I'm aware of in the strategic lines to bring it all together to help on performance where we meet on services. Those lines are about project management, process engineering, and advisory using CFO controlling and lean project and process skills for cost accounting, managerial finance, and much more. To the point on the presentation, this is about a beginning balance sheet, could be the startup balance sheet of your business, or year two or another year in your entity. Going on a cycle of reporting periods, 12 periods representing 12 months from beginning to end. The 12th month typically being a reporting date for financial end-year financial reports, financial audit, for taxation, for compliance and other purposes. And again, on taxation, you have incremental periods where you're going to break down the period of 12 months into 4 periods, but that's a different conversation in the tax line. It's just relevant to know that across your reporting line you have many different reports and cycles, and that of course is a point where technology and financials work together in the support lines. For the purpose of the beginning balance sheet, you have your assets, you have your liability, your assets being things you own, cash, equipment, types of things like that in your business, liabilities being debt that you owe, lines of credits, and equity being, depending on your capital structure, as a sole proprietorship, as a partnership, or as a small entity with shareholders, or a publicly traded entity, could be stockholders' equity as well. We're looking at what you start with here. The balance sheet is a statement of economic condition at a point in time. In this case, T equals 0. It's the beginning balance sheet. We're going to talk about the walk over to here to T plus 12. I don't think you can read that, but it's T plus 12, the ending balance sheet. In between, as we walk across the periods, each month we're producing a close, an expedient close ideally, where all your data that maps through is coming up pretty timely, and that's one of the value points to help manage the way the financials and technology are working together, and the human capital, making sure your people are trained in the right way to get good information in the financials and to manage those closes timely. That can be a point of confusion, but it's a process for another conversation we can have. Sometimes meaning that your human capital assets were not correctly trained or communicated to. People might not be aware of the things they can do to be more efficient on the close. That's a skill we bring to you too, to help manage timely closes. In between the beginning balance sheet and the ending balance sheet, you have generations of your P&L, your income statement, which talks about revenues, your incomes from goods or services, basically gone to market, or both goods and services, and the money that comes in when you sell that to clients, and the various recognition methods of accrual or cost or mixed, or cash basis or mixed basis recognition of income. And then you have your expense line, which corresponds to you've spent money for labor, electricity, for inventory, and all those good type of things which correspond to generation of revenue in your entity. The matching of these is of importance for mapping the value change from period to period and from reporting cycle to reporting cycle in the financials. There are things which are not reported where revenues and expenses are. Those are in your cash flow cycle, corresponding to, in broad strokes, the operating, investing, and financing activities. Operating activities correspond to your revenues and your expenses, typically from the normal course of operating business. Investing would be, let's say over here during the period we decide to buy some computers. We're not going to pay cash. We're going to decide to finance those. So there'll be some repercussions to the cash flows as we make interest payments in the investing lines. And then the financing line has to do with the decision of capital structure, the way that you use debt and equity or some mix of that, and at times there's hybrids which have characters of both, debt which turns into equity. Excuse me, how you use those financing decisions comes through here, and net your P&L and your cash flows are a bridge from period to period between balance sheets, and they explain to you at those specific operating periods within business cycles and for the end-to-end reporting cycle. These are all points where we can help in the financials. It has a lot to do in the broader terms of how we apply GAAP, IFRS, tax basis, regulatory basis, and other comprehensive basis of reporting called OCPOA. Beyond that, there's the managerial lines of managerial finance and accounting, cost accounting, that can help in the efficiency in here, working with the mindset to the value of people power potential, to technology, all elements where this unites to support sales, marketing, research and development, operations, analysis, and research and development, all the type of things that happen within any business. For the end-to-end period on financials, we map in with CFO, controller, interim advisory skills, having owned the financials from entry to output. And then there's another strategic line where our skills with technology and project management and business analysis help on this whole cycle and many elements of value generation within here. I'm Dean Carson, Connected Lines of DCarsonCPA. Those are our lines of global financial decision-making research, speaking to the needs of boards, directors, senior executives, managers, and staffs to help train up the value points where staff are contributing value within these lines and are deployed to help in your business. And in the lines of your P&L and cash flows management, those type of things. We work with project, process, and advisory lines that speak about the ways that financials will work with technology and engineering for the data, for the financial, for the communication lines that correspond to your business. And primarily 3 key points, thinking about growth, efficiency, and improvements in your entity and the way your entity meets the economy. And connecting on the last point of risk management, which is all this stuff is value-added information about your business. It's a component of entity IQ in the aggregate. And it has an important need for risk management and cybersecurity in this day and age of many apparent risks across sectors. So we have a very strong, comprehensive solution. It's not that we're going to deal with every line on one single day, but we have the potential to be a strong strategic set at any point along the line. And these are our lines of the reporting cycle. So DCarsonCPA, DCarsonCPA MFC in the reporting cycle. We hope you found this interesting and value added for your analysis. Much more to the details for accounting policy, for technical accounting, for risk management, for economic research, for mapping the value of your entity here out to the economy and back, to help on management accounting lines, and for the embedded lines of GAAP, IFRS, tax, regulatory reporting, and much, much more. I'm Dean Carson. We're here to help with strategic and operational skills. We hope you'll find your way to our resources and understand with the value of knowledge we've brought together, there's many ways we can help your business, your entity succeed, whether you're an industry, nonprofit, NGO, a governmental entity, or if you're an individual and family in the community lines of trying to look at all this and see how it connects to where you are. DCarsonCPA is your line of global financial decision-making research calibrated to the local, state, national, and global lines to help at any point in decision-making along these lines, but rooted to the value at work within the financials. This is a reporting cycle, and we map in to help where the strategy is into your entity, for the needs of society, for the needs of entities, for the needs of communities, and much more. I'm Dean Carson on Consulting Lines. We're here to help. Thank you.